You want to understand the financial heartbeat of the UK, right? To sort of cut through the noise and get straight to what actually matters.
Yeah.
Well, you've come to the right place. Today, we're doing a deep dive into the latest official figures, the HMRC data on tax receipts and national insurance contributions for 2024-25. That's the fiscal year, April to April.
Exactly. And our goal isn't just, listing numbers. It's about understanding the story these figures tell. What's happening with the UK's finances.
Right.
We're drawing directly from HMRC's annual bulletin here. That's our main source. Trying to pull out the key trends, give you some clarity you probably won't get just from the headlines.
Okay, so let's start big picture. What are we looking at overall?
Well, in the total tax collected in 2024-25, it hit $857 billion.
857 billion. Wow. How does that compare to the year before?
That's up 3.4% compared to 2023-24. But what's maybe more striking is the longer view. Go back, say, 2 decades. 2005-06, the total was $402.9 billion.
So it's more than doubled in less than 20 years.
It has. It's quite a climb.
What does that sort of growth really signify, though? Is it just inflation or?
Well, that's a crucial point. It's not just the absolute number. We should look at it relative to the economy, relative to GDP.
Okay.
And tax receipts, as a proportion of GDP, they've also nudged up a bit. It was 28.4% back in 2005-06.
And now?
Now it's 29.8% for 2024-25.
So a subtle increase, but
Accent.
noticeable over time, taking a slightly bigger slice of the economic pie.
Exactly. It's a gradual but persistent rise in the tax burden relative to the size of the economy. And, that does raise questions for you to think about, like, what's the right level of tax? How does it affect growth or your own disposable income?
Yeah, definitely food for thought. Okay, so that's the overall picture. Let's maybe break down that 857 billion. Where's most of it coming from?
Right. Well, the biggest chunk by far comes from income tax, capital gains tax, and national insurance contributions, NICs.
Okay.
Together, in 2024-25, they brought in $486.9 billion.
Almost 487 billion out of 857. That's what, over half?
Yeah, it works out to 57% of the total receipts for the year.
And is that typical? Has it always been that high?
It's actually remarkably consistent. If you look over the last decade, the average has been around 56%. So 57% is right in line.
Interesting. So the reliance on personal taxes, income, NICs hasn't really shifted much fundamentally.
Not in terms of proportion, no. But the absolute amount, that's grown hugely. Remember, it was $223.5 billion back in 2005-06. Now it's that $486.9 billion figure.
Right. Huge jump in cash terms.
And again, looking at it as a slice of the economy, as a proportion of GDP, that's also gone up. From 15.8% in 05-06 to 16.9% now.
Okay, now here's something I find a bit confusing. Didn't the rate for employee national insurance go down recently?
It did, yes.
So how come the total receipts from this category still went up year on year? Seems counterintuitive.
It does seem that way on the surface, doesn't it? But it raises a really important point about what drives these numbers. The HMRC data actually points to 2 main things happening at the same time. One is just overall pay growth. Wages have been rising. So even with a slightly lower NICs rate, if the amount people are earning goes up, the total collected can still increase.
Ah, right. A smaller percentage of a bigger number can still be more.
Exactly. And the second factor, which is really significant, is the continued freeze on income tax thresholds.
Fiscal drag we hear about.
Precisely. As wages rise, often just with inflation, people get pulled into higher tax brackets or more of their income falls into the existing brackets because those thresholds aren't moving up.
So even if your pay rise just keeps pace with inflation, your real terms income might not change much, but you could end up paying more tax.
That's the effect. So those 2 things, wage growth and frozen thresholds, have more than offset the impact of the reduced NICs rate, leading to that overall increase in receipts from income tax, CGT, and NICs combined.
Okay, that makes a lot more sense now. So individual taxes, they're clearly the heavyweight champion here. What comes next? What about, say, business taxes or VAT?
Yeah, good question. After those income-related taxes, VAT and business taxes are the next biggest contributors.
How much do they bring in?
Well, looking at the average over the last 10 years or so, VAT usually accounts for about 21% of total receipts.
Right.
And business taxes average around 10%.
So significant, but definitely smaller than the income tax and NIC's chunk.
Oh, yes. But still, vital sources of revenue for the government.
Let's dig into those business taxes a bit more then, that 10% average. How have the actual receipts changed?
They've seen a pretty big jump in cash terms over the long run. Back in 2005-06, it was $44.4 billion.
Yeah.
For 2024-25, it reached 97.9 billion, almost 98 billion.
Oh, they're near doubling, roughly. But what about as a share of the economy? Did that change much?
Interestingly, not so much. As a proportion of GDP, it was 3.1% back in 05-06, and in 24-25, it was 3.4%. So relatively stable in economic terms.
Despite policy changes, I thought corporation tax went up recently.
It did. And that's a key point here. The 2024-25 figures, they fully reflect the impact of that corporation tax rate increase.
Ah, okay. So we're seeing that policy change feed directly into the revenue figures now.
Exactly. It's a clear example. And business taxes isn't just corporation tax, though that's the main one. It's actually a collection of different levies.
Like what?
You've got things like the petroleum revenue tax, the bank levy, the bank surcharge, reverted profits tax, trying to catch profits shifted overseas, the digital services tax,
Right.
the energy profits levy, the windfall tax, the economic crime levy, and the electricity generator levy. Quite a list.
Yeah, a real mix targeting different sectors and activities.
It is. And just a small note, the data reminds us these figures are gross of any company tax credits, and they can sometimes be revised later as more data comes in, so subject to minor changes.
Got it. Okay, so we've covered income, NICs, VAT, business taxes. What about taxes linked to, say, property? Stamp duty.
Right, stamp taxes. They've also seen an increase in cash terms over the last couple of decades, from 10.9 billion in 2005-06 up to 18.3 billion in 2024-25.
Okay, another rise. But how does that look against GDP? Did that follow the same pattern as business taxes, staying stable?
Actually, no. As a proportion of GDP, stamp taxes have slightly decreased. It was 0.8% back then, and it's down to 0.6% in 2024-25.
Oh, that's interesting. So cash receipts are up, but relative to the overall economy, they're slightly less significant. Why the cash increase in this latest year, then?
The HMRC bulletin points to a couple of main reasons for the 2024-25 increase. Firstly, the impact of higher stamp duty land tax rates on additional dwellings, second homes, buy-to-let.
Yes, that surcharge.
That higher rate structure, particularly changes implemented towards the end of 2024, played a part. And secondly, just an increase in the number of property transactions happening overall.
So a mix of policy changes and market activity driving those numbers.
Exactly. Both factors influencing the final figure.
Okay, one more major area that often gets people talking. Inheritance tax, IHT. What's the picture there?
Yes, IHT. Well, the trend there is definitely upwards, quite significantly, actually. Annual receipts were £3.3 billion back in 2005-06.
Seems quite small compared to the others we discussed.
It is, relatively.
Well,
But fast forward to 2024-25, and that figure reached $8.250 billion.
$8.25 billion, so more than doubled, nearly tripled almost. Why such a sustained growth, especially recently?
Well, the continued growth, particularly noticeable since around 2022-23, seems to be down to a combination of things. One is rising asset values.
Property prices going up, investments increasing in value.
Exactly. So more estates are simply worth more, pushing them over the IHT thresholds.
Right.
And the other key factor is government policy. The decision to keep the main IHT thresholds, the nil rate band, and the residence nil rate band frozen at their 2020-21 levels.
And they're frozen for quite a while, aren't they?
They are. The current plan is to keep them frozen right up to and including the 2029-30 tax year.
So same thresholds, rising asset values, more and more estates get caught.
That's the mechanism. It means a growing number of estates are falling into the IHT net, or paying more IHT than they might have if thresholds had risen with inflation.
And that $8.25 billion figure combined with those frozen bands certainly explains why IHT remains such a, well, hotly debated topic.
Absolutely. It feeds right into discussions about wealth, fairness, intergenerational transfers, and it's definitely a trend impacting financial planning for a growing number of families.
Okay, so let's try and pull this all together then. We've covered a lot of ground.
We have.
The big picture is clearly one of growing overall tax receipts for the UK government. $857 billion in total for 2024-25.
Yep, a significant sum and up 3.4% on the previous year.
And the main drivers remain income tax, capital gains tax, and national insurance. They make up that dominant 57% share.
That's right. And interestingly, receipts there grew despite the cut in the employee NIC's rate.
Which we now understand is largely due to wage growth and those frozen income tax thresholds pulling more income into tax.
Precisely. Then we saw business tax receipts reflecting that increase in the corporation tax rate, hitting nearly $98 billion.
While stamp duty was influenced by both policy on additional homes and market transaction levels, bringing in over $18 billion.
And finally, that notable and continuing rise in inheritance tax revenue up to $8.25 billion, driven by asset values and those frozen thresholds.
It paints a really detailed picture of where the government's money is coming from, doesn't it?
It certainly does, and it naturally leads, I think, to a final thought for you, the listener, to maybe mull over.
Go on.
Well, and when you consider all these trends, the overall growth and how much tax is being collected, the heavy reliance on certain taxes like income tax and NICs, the clear impact we see from specific policy decisions like freezing thresholds or changing rates,
Yeah.
what might the long-term implications be? Not just for, public services that depend on this money.
But for individuals, too.
Exactly. For your own finances, for planning, and also for the wider UK economy's path forward. How does this balance of taxation affect growth, investment, fairness?
It's definitely a complex picture, lots of interconnected parts, and seeing the actual numbers really brings it home.
It does. There are no easy answers, but understanding these trends from the official data is, well, it's a crucial starting point.